Gold has made some big gains in the last week, driven by the conflict in Israel and Gaza. Will that continue? Is the stock market bottoming? Are interest rates topping out? These are all questions that I'll answer in this week's Stockscores Market Minutes. So anytime there is political conflict, military conflict in the world, you often see gold make a big jump. People take this flight to safety when there's uncertainty and fear that things could get worse. Now, most of the time, that move is short-lived. As the conflict sort of becomes less shocking, the gold reaction also becomes less pronounced. We see this over and over with Afghanistan and Iraq and all the different big conflicts that we've seen, 9/11. So typically that's what happens. But ultimately I believe in just following what the charts tell me to do. And so we'll take a look at the chart of gold and assess whether it's likely that gold is going to go up or down, if it should be bought or not, and then look at the mining stock index for gold miners to see if that's something to consider here, given the gains that we've seen in gold over the last week. So let's jump into the first chart. This is a chart of gold itself. It's the ETF GLD. And what you can see is that the price of gold was moving down quite sharply, and then it was broken there on the 6th, and then we had the gap up on the 9th. So we had the breakup from a rising bottom on the 9th. The initial downward trend line break was on the 6th. Those were the days to buy. Those were the days when you had the buy signal because you broke the downward trend line and then broke from a rising bottom. To buy it now is very risky. We have a rule in chart analysis. If you draw a line across the bottoms, that's your trend line. And the farther you get away from the trend line, the more overbought you are. And so what we have in the situation with gold is it's quite overbought. As investors went into the weekend, they didn't want to, be without some safety net. So we saw stocks kind of sell off and money moved into gold. Will that continue? Well, to answer that, I'd like to look at the longer term chart. And this time we'll look at the chart of the gold miners. So this is GDX, which is an ETF that represents gold miners. And if I draw a trend line across these tops, this is a daily chart now, you can see that gold has risen to the downward trend line. It hit it here, it hit it here, and that is typically an area of resistance. So when price rallies into that trend line, it usually gets stuck. And we've seen that here, rally into the trend line, it will most likely get stuck. I would say 70% chance that you will see gold pull back in the next couple of trading days. But that actually presents the trading opportunity. Because when something starts to gather upward momentum, I like to buy the breaks of pullbacks. Now at the end of the video, I'm going to show you an example of a day trade where we did exactly that on, I think Wednesday or Thursday, no, maybe even Friday, or late this recent week. We did a day trade where it took this exact concept of buying the pullback in something that has upward momentum. So gold has got some upward momentum, more so in the short term on the sort of the intraday chart, not really in the long term, because as you can see by the chart here, we are in a downward trend on the daily chart. But if we get a little pullback and then a break of a pullback, that's the point I'd have some interest in buying gold. Otherwise, I think you shouldn't chase it here and be fairly cautious with it. All right, well, let's get into this week's market analysis. I'll jump over to the Stockscores website where we have a chart of the S&P 500 ETF, SPY. And you can see the weakness over the last 3 months has this little downward trend line, but it's basically taking price down to the long-term upward trend line. And so that's an area of strong support. Just like gold is rallying into resistance at the downward trend line, here we have the stock market falling into support at the upward trend line. And so it's very likely that we will bounce here. And we've actually sort of done that the past 2 weeks. Now, if we stall here like we have and then break down through the trend line, then we're going to need to get fairly bearish. But for now, it actually looks okay. The S&P 500 large cap US stocks look fairly stable and more likely to move up from here than down. Now let's just take a look at the short-term chart of the S&P. And you can see that we had this downward trend line that was broken. We moved up. We're now pulling back and likely going to make a rising bottom and then break that trend line on the daily time frame. So things are looking good, but still not, we still don't have the definitive signal to make me want to be bullish. I'm still sort of neutral on this market. All right, let's take a look at the NASDAQ 100 ETF. Very similar. Upward trend line is here, and we've essentially pulled back to it, bounced off of it. If we were to break down through from these falling tops, then we'll need to get fairly bearish. But for now, it looks like it should hold here. All right, how about the Russell 2000 US small caps? And I'm going to jump to the 1 month chart here. And there you see something quite different from what we saw on the large cap indexes. This is much more in a downward trend. You can see the stock scores are very low. Sentiment stock score of 29 is very low. And the reason that that's happening is because the small cap stocks are much more interest rate sensitive. If we jump to the 3-year chart, we can see we've been going down more substantially than on the large cap stocks. And again, that's because interest rates have been rising and the small cap stocks are more sensitive to that. Now, the good thing is that the small cap stocks are getting very close to that long-term support. There is some support here, which we're right at now. But if we break through that one, we've got this very long-term support that held up twice in 2022. So I don't think there's a lot more downside for the small cap stocks, but still they are in a downward trend. Now, something very important to recognize. Even though the small cap stocks in general are going down, the best swing and day trading opportunities that I see these days come from those small cap stocks, because the small cap companies can be disconnected from the market index if they have something significant going on in their business. So, if you're a biotech stock and you find a treatment for cancer that's effective, it doesn't matter that most biotech stocks are going down. Your stock is going to go up and go up a lot, trading on heavy volume. And so when I see trading opportunities in the market each day, they're often those small companies, small number of shares in their float, the number of shares in the public's hands to trade, and they trade huge volume and they make big jumps, triple digit gains in sometimes a day, a couple of days. So that is still the place to be looking for opportunity. All right, well, now we're going to jump into the Canadian market. T.XIU is our symbol there. And you can see weakness over the last few weeks. If we jump to the short-term chart, generally weak, and then the last few days rallying. And that's because, as you'll see in a moment, gold and oil both rose because of the conflict in Israel. And that has given support to those commodities, which are heavily weighted on the Canadian market. There's a lot of mining companies and energy stocks on the Canadian market, and that's what brought this about. Now, the banking stocks in the US, in Canada, are still poor. A lot of the large cap companies that are listed on the TSX are not doing well outside of those commodity sectors. And so you got to trade where the action is. And if you're trading the Canadian market, I would look toward energy, maybe mining, although like I said at the top of the video, I do think we still need a little bit more upward momentum to build with some rising bottoms. Not there yet. All right, so let's now jump into the gold chart. GLD is the symbol for that. And there you can see the very funny chart. We had this big drop 2 weeks ago, and then the market came right back this week as people scrambled into gold as some safe haven. And there again is that chart that I showed at the top of the video. I think it's likely that gold will reverse. We're coming into this resistance zone. We've made significant gains, a little overbought. So I think gold pulls back. But again, if it builds a rising bottom and then starts to break through that resistance, then I'd be more interested in being a buyer. Right now, I am not. I think it's too risky. On to oil, USO. We had that breakdown 2 weeks ago, which started to break this upward trend line. And then we bounced back this week because of, again, the conflict in the Middle East. And is that sustainable? Is that going to keep oil up? Hard to say. The way you answer that question ultimately is to watch the chart. If we break down through this support from a falling top, then oil is going lower. If we continue to build rising bottoms, then you can sort of stay optimistic about oil. So generally the trend is good. We have a sentiment stock score of 66 on oil. So the momentum is up, but there's a lot of volatility here, which tells me there's a lot of uncertainty. So I think you really have to play it week by week. Of course, I'll tell you what's happening. Make sure you're subscribed to the channel, because every Sunday I do this video, upload it, make sure you turn your notifications on, and that way you'll get an email from YouTube when I've uploaded the new video. All right, well, let's keep on moving here. We're going to jump to the US dollar, which has really been in a strong trend for a few months. You can see here the upward trend in the US dollar, and it's still in, so the buyers are in control in the short term. You can see we just have these little pullbacks to the trend line, but we're still strong on the US dollar. How about Bitcoin? GBTC is the symbol there. And you can see that in general, there are rising bottoms. This is an ascending triangle pattern. If we can get a strong breakout from this, I think Bitcoin's going to rally. So watch this chart, because I think that it's quite likely that we'll get a breakout soon, a buy signal on Bitcoin. Again, I'll watch it for you. Just make sure you're checking in on these videos every week, and I'll let you know when that happens. Now, the last chart I want to look at is the chart of the US Treasury bond market. So this is what US Treasuries are doing, which is basically the bond market going down. If the bond market is going down, then interest rates are going up. And so you can see that interest rates have risen quite a lot the last few months after being stable since September of last year. Starting in late July, we saw the bond market fall, which means interest rates rose, and that got a little overextended. Now, if we go to the short-term chart of this, you will see that we got a little extended to the downside. Why do I say that? Well, there's your trend line, and then we can draw another trend line like this. It's a lot steeper, and so we were quite oversold because the distance to that trend line was far. We broke this pullback early in the week, and we've been starting to move up in the bond market, which means interest rates have been moving down a little bit at this week. And that is one of the things that is giving some support to the stock market. If this continues, I think that's going to help the stock market start to move up again. Now remember, as I've said in recent weeks, seasonality-wise, this is usually the time when stocks start to move up. October until May, sometimes November till June, that sort of time frame. But we're starting to see that phenomenon going on. So if you've been sort of sitting on the sidelines, sitting in cash, waiting for the market to improve, now's the time to start looking for opportunities, because it does appear that the market's going to reverse. Also, one other important thing to remember, the best markets come after weakness, and the worst markets come after strength. So we had tremendous strength in 2021, and then we had that pullback in 2022 into 2023. Now we've had a big pullback. That should now bring on the next strong market. We don't really have the sign yet, but it should happen soon. And of course, I'll keep watching that for you. All right, so let's get into my ratings then. On US large cap stocks and NASDAQ, I'm neutral on both time frames. They're at the critical support zone where they should bounce. Short term, bearish on US small cap stocks, but long term neutral, because small cap stocks have fallen into support where they should bounce. Canadian stocks, gold, oil, neutral on all time frames. US dollar and Bitcoin, bullish on both time frames. And I think there's an opportunity building in Bitcoin. I want to see it break out yet. It hasn't happened yet, but maybe this week that'll happen. Interest rates, short-term neutral, as they are trying to come down a little bit, but still the trend in the long term is bullish, which means interest rates are still in an upward trend. All right, well, now it's time for the day trade of the week, and I told you I would show you an example of how you can buy weakness in something that's strong. And it's this idea of pullbacks. So the criteria for me are a stock needs to be abnormal and having upward momentum. Now, the overall stock market on Friday was weak, and yet this stock was able to go up, and it was trading more volume than normal. So that tells me that the stock is in play. This is one of those small cap stocks that is able to go up because they have something happening that gets investors excited. I don't want to buy the strength. I don't want to buy this upward move. I want to buy the break of the pullback when I see my action candle indicator fire. And so on my 1 minute chart of TANH, we saw the action candle right there at just between 11:30 and 12 o'clock. Our entry price is this. Our stop is there, just under 195, 194. And the stock rallied all the way up to 394 at the high. You'd probably be selling there on the break of the parabolic trend. But in percentage terms, you're going from a little over $2 to about $3.25, $3.30 in the course of a couple hours. And that's the kind of thing that I teach people to do. Give them the tools to do it. That's all part of what we do at Stockscores. So make sure you check that out if you have an interest in learning my approach and using my tools. Hope you've enjoyed this video. What do you think? Is gold going to top out here? Are we going to see it roll over and go lower? Or is it going to continue higher as the conflict in Israel escalates? Love to hear your thoughts on that. Hope you've enjoyed this week's video. If so, click on the like button, and most importantly, trade well.